Daily Mortgage Rates Live with the Mortgage Calculator. We are going live on all the different platforms, so we will wait just a minute to get started here. So hang tight. We are streaming on YouTube, Facebook, Instagram, and LinkedIn. So give us a moment to get up on all the different platforms. We did put the chat up on the screen, so feel free to drop a comment in the chat as you tune in. We put it up there on the screen for you. Going to be interesting to see the rates today, which we'll go over in a minute. And then we got a great deep dive topic, something that we're very familiar with and passionate about here at the Mortgage Calculator. But just hang tight with us here while we get going on all the different platforms. Thank you, everyone that's commenting already, people tuning in early. Looks like Nicole, Sonara, Mark, Adam, Christina, Jason. Thank you, everyone, for commenting. Appreciate that. Everybody else just tuning in, feel free to drop a comment there. We got the chat pulled up on the screen. And we'll get into it momentarily. All right, looks like we are live on all the different platforms, so we are good to go. We'll go ahead and take the chat off the screen and then get into it. So welcome, everyone. My name is Kyle Hiersche. I'm the COO of the Mortgage Calculator, joined here by Nick Hiersche, our president, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And today's deep dive topic is one of the loans that we're very passionate about here, which is profit and loss statement loans. So we're going to have our sales manager, Jose Gonzalez, with 27 years of experience, do a deep dive into that topic here today. But before we do that, what we do every morning on this show is pull up the actual live mortgage rates for today for different programs and go through them. So we'll get into the deep dive in a little bit, but before we do that, Nick, why don't we go ahead and pull up our pricing tool so we can go through the rates and see what the market is looking like this morning.
All right, let me go ahead and switch my screen and we will get started. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. This will allow us to check out the general rates and terms. It is June 7th, just after 11 a.m. Eastern. So all of our general rates are live. And we're going to see the rates and the APR, which includes all the costs. If you'd like a detailed breakdown, full loan estimate with all the itemized fees that go into the APR, please get with our team members. We have over 300 licensed loan officers in 24 states for primary and second homes. And we can do our DSCR business purpose, which we'll talk about in a minute, in 44 states for investment properties. So pretty good coverage there. Now for our demo today, we will set up a nice, easy loan scenario and then compare the APR across the different programs. So for all of our demos, we'll set up a 400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost. That's our typical request right now. And we're going to check out our conforming conventional, compare that to our FHA, and then check out our expanded guidelines, aka non-QM, where we have over 5,000 additional loan programs that go beyond the conforming guidelines. Remember, VA is only for our eligible veterans and active service members. If you are eligible, we'd be happy to quote that. It just takes a few minutes, but not everybody is eligible, so we don't do that live. And same with USDA. That's only for properties that are eligible. So properties that are in a USDA eligible rural area, if you do happen to be shopping there, let us know. We'd be happy to quote it. Let's start today with our conforming conventional, as we do every day. We'll set up a purchase, 30-year fixed loan, standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade, estimated FICO score of 760 for all our demos today, and an estimated debt to income ratio of 40 for all our demos today. So with those basic settings, let's check out the conventional rates. About the same as it was yesterday, so not much change here. Sometimes no change is good. 6.875 rate, 1 discount point in cost, and a final APR just a hair over 7 at 7.042. So remember, APR includes all the costs for the loan, so that allows us to compare apples to apples across programs. So if for any reason our customer in this case wants to compare different options, these are the conventional rates, but let's compare the APR to the next option, which will be an FHA loan. So next we'll switch this to FHA. Everything else will stay exactly the same. That way we compare across the programs. FHA is usually the next option that we go to. FHA allows a little more leniency on credit items and a much higher DTI ratio. But in this case, we're just going to compare it side by side with everything the same. So let's check the FHA rates this morning. Looks about the same as yesterday too, so sometimes no news is good news. 6.125 rate for 1 discount point and cost, and a final APR of 6.717. So remember, we compare APRs. APR includes, in this case for FHA, the upfront mortgage insurance and yearly mortgage insurance. So all the costs are included. But in this case, FHA is actually a little bit cheaper for this scenario for this borrower. So definitely recommend our borrowers out there shopping for conventional. Don't forget about FHA. With some recent changes, it might actually be a little bit cheaper, like it is in this case for our borrower here with this scenario. So definitely some great options here. Now, where we really specialize here at the Mortgage Calculator is if our customer doesn't qualify for FHA or conventional for any reason. Many other banks or lenders don't have other options, but that's where we love to come in with our 5,000 additional options under expanded guidelines, aka non-QM. So we keep everything else exactly the same. That way we're comparing apples to apples again, but we have one new option we have to select when we pick non-QM, and that is our income option. So full doc is what we use for FHA and conventional. That's 2 years of tax returns, what most people are used to. So typically we would choose a non-QM option in order to select one of the alternatives, such as asset related, business bank statement. The investor programs are just for investment properties. We'll talk about that in a minute. Personal bank statements, our most popular program by far. RSU, stated, VOE, 1099, P&L, no income at all. Lots of different options. But our most popular is the 12-month personal bank statement. And that's going to be for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, have different write-offs and may not qualify at all or may not quite qualify for as much income for the home they really want. So in this case, to solve that problem for our borrowers, we're going to use alternative income, where we're only using the last 12 bank statements, and we're going to determine a debt to income ratio of 40 in this example, using their actual cash in the bank rather than their tax returns. So most self-employed borrowers will qualify for 2, 3, 4 times the amount of income, and therefore qualify where they wouldn't before, or qualify for the higher income to get that home they really want. So these are great solutions for our borrowers that may not qualify or just need a little extra help to get that extra income. So let's check out the bank statement rates this morning. So some great options. We always love when our non-QM stuff, that's really what we love here at the Mortgage Calculator, when it's very comparable to the conventional options. And in this case, it is. So the best option the computer found, 7.375 rate, very comparable there, for 0.75 discount points, not really much higher cost, and a final APR of 7.433. So remember, conventional was just a hair over 7 APR. Now we can compare apples to apples with a non-QM program using a completely different method, and it's only about 0.4 higher. So great options here. We love when our non-QM are very comparable. Definitely recommend our borrowers that may need a little extra help, maybe right on that borderline, consider a non-QM, especially with the rates. Maybe you got pre-qualified a few months ago when rates might have been a little bit lower. Now you need a little extra help. That's where these programs come in. And we have hundreds of them. So if you scroll down here, you'll see tons of different options. Some of these at the higher rates may allow things like credit events, such as a foreclosure or bankruptcy or other little loopholes in the program. So these are where we love to shine here and provide solutions for our borrowers who might have some trouble qualifying for the other standard programs. Now, before we pass it over to Jose for a deep dive into the P&L, which is one option. This is bank statement. Obviously, P&L is one specific option of this. We always want to do our live rates for investment properties. So let me do our last two examples here, where we select investment property. So we love to work with investors, whether they are first-time investors or seasoned investors with dozens of properties. We have great options. So let's set up the same exact scenario as we've done before, 80% loan to value. Everything else will be exactly the same as before. And we're going to compare our two investment property options. We'll start with conventional, and then we'll check out expanded guidelines, aka non-QM. Remember, FHA, VA, and USDA are only for primary homes, not investment properties, so those are not applicable. So let's start with conforming real quick. Everything will stay the same as all our other demos. Notice the only thing we changed here was the occupancy. So let's check out the conventional investment property rates. So this option is really expensive. It's probably actually wouldn't pass compliance. So let me highlight this option here, since this may pass compliance, still be borderline here. So 7.125 rate for 3.75 discount points and costs, and a final APR of 7.383. So a good option here for our borrowers that qualify for conforming. But as I say every day, the GSEs that operate the conventional programs have added price adjustment for investments. So unfortunately, the computer doesn't find any options for one discount point in cost. And in this scenario, $15,000 cost for a investor, they're usually asking to reduce that by raising the rate. Most investors don't mind a higher rate as long as they can cash flow in order to save this cash out of pocket here. So that's where we love to present our non-QM solutions, because of the loan level price adjustments on the conventional. We just can't get around that. So for our final demo, set this back to investment, set this back to 80, and we will check out our expanded guidelines, aka non-QM, for investment properties. So now we have a couple new options we have to select. Everything else is going to stay the same, of course. But as always with non-QM, we have to select the income. And the income type that is the most popular by far for investments, and our most popular loan program in general here at the Mortgage Calculator, is our DSCR program. That's really what we specialize in. So the option is typically selected because it doesn't actually require any income. It's going to just use the estimated rental income from the property that we're purchasing in this example. And if the estimated rental income from the property can support the PITIA, the expenses of the property, that has a debt service coverage ratio, DSCR, that's what it stands for, of 1.00 or higher, aka the property cash flows on a monthly basis and covers those expenses. Now we even have options for a DSCR ratio under 1.00, aka the property doesn't cash flow on a monthly basis. Maybe it's a little bit short. We still have options for that. For a live demo, I always delete this just so we can see all the different options pop up. And the final thing we need to select for a non-QM investment property is a prepayment penalty. It always is standard on these programs. 3 years is standard, so that's what we always select. There are options for 0. There are limited loan programs that allow that, and it will cost much more. And same with 5 years. There are options for that. It will cost less, but there are limited loan programs. So to show the most amount of programs, we're always going to select 3 years for our demo, since that is pretty standard. So with these basic settings, let's check out the DSCR rates today. My computer get frozen? Ooh, okay, there we go. Frozen for a second. My bad. So the best option the computer found for DSCR, 7.75 rate, 0.975 discount points and costs, and a final APR of 7.816. So this is a great option. Obviously, this option has a high DSCR ratio of greater than 1.4. So the properties that cash flow higher obviously get a little better programs, but there's tons of options here. And we love when these options are very comparable to conventional. Remember, conventional was 7.4 range. So again, non-QM right here with conventional, and this doesn't require any income, any employment, and you can start 1, 2, 5, 10 DSCR loans at a time because you can cash out multiple properties, purchase multiple properties. None of it needs any income or employment, so there's really no limit. So our investors absolutely love these programs. And when you compare it to conventional, many times, probably about 90% of the time, our customers will select a DSCR program when they're comparing it apples to apples to a conventional program. So definitely recommend all our investors out there check out these programs. There are a ton of options for different DSCR values. You'll see here, if we scroll down, there'll be some with different prepayment penalty options. Some of these may allow short-term rental incomes. Some of these may allow bankruptcies and foreclosures. There's a ton of different options. Please get with our team. They'll find the one that fits best for your scenario. Now, let's go into our deep dive topic for today. Let me switch my screen real quick. And we will introduce Jose's segment. And Jose's segment today is going to be on profit and loss loans. So these are a subset of the non-QM. Remember when we went through the non-QM, one of the options was the bank statement, which we did live. We can always select the P&L options that you saw there lower on the chart. That is a subset of the non-QM. Obviously, it has to do with a P&L report being generated and used for the income. But I'll let Jose explain a little bit more about that. These are popular programs for primary, second, and investment properties as well. So this is just one way to do income under non-QM. It can be used for any of the different property types, basically. So it's just an income type of non-QM. So with that kind of intro, let's have you take it over, Jose, and get into some live examples.
All right. Good morning, everybody. Thank you for joining us. Daily Rates Live with the Mortgage Calculator. P&L is a very interesting product. I would say overall it may be a little bit underutilized in the industry because a lot of people don't have a good grasp of it, may not have knowledge that it even exists because it is such an esoteric concept where we can get a full doc loan that is basically the supporting documentation is an unaudited tax preparer or accountant, tax preparer prepared or accountant prepared or CPA prepared. By any of those three different routes can prepare the P&L as long as you can verify licensing or registration with the IRS, and then that and a third-party verification letter, and you got the deal. Right now, this is the bank statement buster. What do I mean by that? Well, bank statement is the most popular non-QM option out there. But when you have an issue with your bank statement loan, maybe declining trends or unverifiable large deposits that are then reduced from the income stream and then may put your DTI out of scope, well, the P&L is an amazing solution for that. You have to have, though, the accountant or tax preparer or CPA that you've been using who's familiar with your finances that can prepare the profit and loss and the third-party verification letter. That's the catch for this. So if you don't have that, you may have to do a little legwork, have somebody review your taxes, and prepare the P&L for you. If you do have it, amazing solution. I'm currently using it right now. Started a loan out bank statement and transitioned it over to P&L at the same cost. It was a no-brainer rather than having to jump through hoops of fire with all of these 12 months of bank statements for multiple businesses for the borrower. We opted to present the P&L for the same businesses and the letter from the accountant, and hopefully we'll be closing that one soon. So great option, and you can go as high as 90% on a primary and 85% on an investment property purchase. So let me share some examples here with you. Let me make my screen a little bit bigger so you all can have a better idea of what I'm looking at here. So here is our
Jose, hit that other button there too to make it full screen. That'll help you too.
I'm not sure which button you're talking
next to
about.
the zoom. Right next to the zoom?
This button?
No, when you're doing the zoom.
Well, sorry. I don't know which button that is. Sorry.
The one next to the zoom. So zoom in, there's a button next to it.
I don't see it. I see it.
All right, never mind.
Okay, I see what you mean. Is that it? That's the full screen button there?
Yes, exactly. That'll make it a little bigger.
That's about as big as she goes.
Exactly. Okay.
So we got primary purchase P&L at a 90% loan to value using only an accountant or tax preparer CPA, like I mentioned, report for 12 months. So here, this option, mind you, there's a limited offerings at 90%. So you do see the rates a little bit higher. So you're looking at 10.125% rate here is at par, and you can buy it down all the way to 8.875%. And this is for our option here. And the only thing with going full screen, Nick, is that I can't get my other tabs.
Yeah, sure. Yeah, you can unclick.
Yeah, unclick.
Yeah, that X at the top.
There we go.
Yeah,
All right,
true.
let's go to my next tab over. Now our 85% LTV option, which is a little bit more in line. Now you notice substantially better rate. So this is always what I like to bring up with the team when we're structuring these deals. You have to give the customer multiple options because the customer may say, "Hey, I want 90%. I want 90%." But you have to show all the options and you have to properly explain the bottom line to them. Because in this example here, the lowest rate we can get is 8.875 at the 90% LTV. And at a $450,000 loan, that's about almost 3 points, right? Versus 7.875 at 7,800, so substantially lower rate and about what $4,000 lower in fees more or less. So that may be something that the customer may be interested in. Pay 2-3% higher down payment, but you end up with a much lower rate. Plus with DTI issues, that may be where you need to end up. So this is our 85% LTV option primary. And then we have an 80%. Now look at these rates, 80%. Now, one thing I do want to note here, please, I always forget to remind everyone that non-QM loans do not have any MI applicable above 80%. So all those rates you saw above 80% already were building in the additional risk for MI. So, but here at an 80%, now this falls right in line with a lot of options out there, a lot of competition for your business. So we're looking at 8.25 has a lender credit of $500. And the same 7.875 that was costing $7,900 here is costing $2,500. So definitely substantial savings. And you can buy it down all the way to 7%, and that's just above 2 points. So if you look at the conventional something like that, we're right around there, right? So that's our best purchase option. So now we'll do some cash out primary options. Again, cash out does have higher risk associated with it, so you do see quite a difference in the rate from our highest LTV purchase to our highest LTV cash out. You're looking at 11% with like one little bit over 1 point. You can buy it down to 10.375 at about 2.25 points. Now at 80%, again, now more in line with the rest of the secondary market, and we get much better options, 8.875 with a $500 lender credit, and we can buy that down all the way to 7.625. So that's our best option for cash out. Now on some investment, 85% is the highest LTV for investment, and lowest cost option, this is investment, lowest cost option 8.75, and lowest rate option 7.99. So this is amazing when you consider what we have here. Compare this to the rates Nick just showed us for investment property conforming, right? This is P&L, this is 85% LTV, this is no mortgage insurance. And look at these rates at 7.99 right there. It looks really good. Now, if you take it down to an 80, it gets even better, right? So you're looking at, let me get this, 9.25 with a $500 lender credit, but you can buy it down all the way to 7.5%. So that's a really good option for our purchase. And now for our cash out investment option, the max LTV on that is 80%. And you have pretty good options here. You're looking at 8.999. They wanted to get that extra 9 in there. 8.999 at par. And you can buy it down to 7.625. So very good options here for P&L These rates are going to be very similar to bank statements, so keep this in mind. If you have a bank statement fallout, P&L is your solution to keep that loan alive and take it to closing.
All right. A couple questions here. Looks like Kyle, your sound isn't working again.
Oh, sorry about that. I was going to say, let's pull up that question from Sonara because that touches on what Jose was just saying there as far as you said if you have a fallout with the bank statement loan. So Sonara's question is, how can P&L be better to use if it doesn't look like their statements are low in profits like bank statements? So I'm assuming the question is, why is a P&L better sometimes for a bank statement or other than a bank statement? Why would you go to P&L, I guess?
I mean, I'm not necessarily saying it's better. It is just an alternative solution to if the bank statements have an issue with some of the things that could go wrong. For example, like bank statements, you could have declining deposit trends, which could cause the underwriter to deny the file because they may feel that the borrower's business is a sinking ship. They may have unverifiable large deposits, which if you can't document them, they get removed from the income stream. And then your borrower may not qualify now. They may have a DTI issue. I mean, if you're comparing apples to apples in terms of, let's say, pricing, it's similar, not always the same. And bank statements may have more options overall out there. So you may have that outlier that's really trying to drum in business and maybe trying to undercut everybody with their pricing, right? So that's something to note there when you're trying to settle the deal, because the one challenge also for the P&L loans is that you have to have a CPA or tax preparer or accountant prepared report and the letter. And some people just don't have the accountant that they can reach out to. They may be doing their own taxes. It's real easy to get a letter for a bank statement loan to say you have 100% use of the funds, of the business funds, and using those business funds will not negatively impact your business. I just had that last condition on a bank statement loan that I just got approved without a third-party verification letter from an accountant, because the borrower told me, Jose, I don't have the accountant that's going to do that. They're not, so we had to really look out and select the right option, the right bank statement option that would not just say it's the letter or nothing at all. I was able to have the borrower do a good business narrative, get good third-party documentation from state and corporate filings to show that they're self-employed and all that kind of stuff, operating agreement to show they're 100% owner, and I got the simple letter to state that they had use of their business funds. However, the P&L has to be prepared by the entity we mentioned, tax preparer, accountant, or CPA, and the third-party verification letter. So it's a lot more difficult to put that together if you don't have the accountant that you've been using for the past year or 2 years doing your tax returns to feel comfortable to do a P&L and write the report. You just can't go randomly and go to an accountant and say, hey, I need you to give me a P&L and give me a letter. No, it doesn't work that way. There has to be a relationship already between the borrower and the tax person, the tax professional, let's just call them that, to prepare that report, because they do have to write in the letter that they've reviewed at least the last tax return for the borrower. So if that piece is in place, the tax professional, then it's an easy deal. If that piece is not in place, then it's almost an impossible deal. So that is the dividing factor between the bank statement and the P&L.
All right. Looks like another question here is, do we offer interest-only DSCR loans?
Yes,
absolutely.
Go ahead, Jose. Interest only, and we also, with the interest-only option, we can also offer 40-year amortization. Not every single DSCR option offers interest-only and 40-year amortization, but that option is out there. And that's one way if you may have a challenge with the debt service coverage ratio being below the needed target, you can review the guidelines to make sure that they will use the interest only payment to qualify the borrower. And if they use the interest only payment, then you got a great solution right there to your DTI issues.
All right. Yeah, and there's plenty of them too. There, like you said, not all options have it, but there's tons of options for the interest only and the 40-year interest only DSCR. We got plenty of outlets for that. All right, looks like that's it for the questions. Thank you, Jose. That was great. P&L loans, if you want more info on them, visit us at themortgagecalculator.com. We can pair you up with one of our 320 loan officer consultants across the country to go through this. Now, we do this show every weekday at 11 a.m. Eastern time, so definitely tune in to the next one. Looks like we do have one more question here, though, so I think we can answer that if you want to pull it up, Nick. The question here from Nelson is, does the CPA or tax preparer have to have done borrower's taxes for 2 years, or will most recent years suffice?
That depends on which program option you select. That is normally why we always, whether it's bank statement or P&L, we always like to go with the shorter review period. It really simplifies the loan because when you extend it out to 24 months, you also increase the possibility that there may be irregularities in the report going that far out, and that's going to require additional documentation, and usually the pricing is almost the same. So the answer to your question is, if you're doing the 1 year report, they would have had to provide some kind of confirmation that they have at least done the most current previous year's tax return for the borrower.
All right, perfect. Well, thank you, everybody, for tuning in. We appreciate it. Thank you, Nick. Thank you, Jose. We hope to see you all tomorrow at 11 a.m. Eastern for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great day.
All right. Thank you, everybody.
Thanks, everybody.